The year 2025 has witnessed a remarkable surge in gold prices, captivating investors and analysts alike. The precious metal, often viewed as a safe haven asset, has been steadily climbing throughout the year, reaching levels not seen in recent history. This surge is not merely a blip on the radar, it reflects deeper economic and geopolitical currents, shaping the global landscape. This upward trajectory has sparked renewed interest in gold as a strategic investment, particularly in times of uncertainty. As we delve deeper into the factors driving this trend, one thing becomes clear. Gold's allure as a store of value and a hedge against risk remains as potent as ever. Understanding the forces at play is crucial for investors seeking to navigate the complexities of today's financial markets. At the heart of gold's 2025 rally lies a confluence of geopolitical risks that have rattled investor confidence and fueled the flight to safety. From simmering trade disputes to escalating tensions in key regions, the global landscape appears increasingly fragile. The uncertainty surrounding these events has prompted investors to seek refuge in assets perceived as safe havens, with gold emerging as a prime beneficiary. When geopolitical tensions rise, so too does the demand for gold, as investors seek to protect their wealth from potential market turmoil. This dynamic has been a key driver of gold's upward momentum throughout the year. While geopolitical tensions have undoubtedly propelled gold's rise, the impact of easing tariff tensions presents a more nuanced picture. On the one hand, reduced trade barriers could foster economic growth and potentially dampen the appeal of safe haven assets like gold. However, the road to trade reconciliation is rarely smooth. Lingering uncertainties and the potential for renewed disputes could keep gold prices buoyed. Investors remain wary of the long-term implications of trade policy shifts, recognizing that even a thawing of tensions does not guarantee lasting stability. Understanding the dynamics between physical and speculative demand is crucial for deciphering gold's price movements. Physical demand stems from tangible uses like jewelry and industrial applications, while speculative demand arises from investors buying and selling gold based on price expectations. In 2025, both physical and speculative demand have contributed to gold's ascent. Robust demand from emerging markets, particularly in Asia, has underpinned physical offtake, while speculative investors have piled into the market, betting on further price appreciation. This interplay between tangible demand and speculative fervor has created a powerful upward force on gold prices. Section 5 ETF inflows, riding the golden wave. Exchange-traded funds or ETFs have emerged as a popular vehicle for investors seeking exposure to gold. These funds, which track the price of gold, have witnessed significant inflows throughout 2025, reflecting the growing appetite for the precious metal. As investors flock to gold ETFs, their purchases translate into increased demand for physical gold, which the funds hold as reserves. This surge in ETF inflows has played a pivotal role in driving up gold prices, amplifying the impact of other market forces. Section 6. The inflation hedge, a safe haven in uncertain times. Beyond geopolitical risks and speculative activity, inflation fears have also contributed to gold's allure. As central banks around the world grapple with rising prices, investors are increasingly turning to gold as a hedge against inflation's erosive effects. Historically, gold has demonstrated its ability to retain its value during periods of inflation, providing investors with a sense of security amid economic uncertainty. This perception of gold as an inflation hedge has further fueled its demand in 2025, solidifying its position as a safe haven asset. Section 7. Looking ahead, charting the course of gold. Predicting the future of gold prices is a complex endeavor, subject to numerous variables and unforeseen events. However, by analyzing current trends and potential scenarios, we can glean insights into the forces that may shape gold's trajectory. Should geopolitical tensions escalate further, gold prices could experience further upward pressure. Conversely, a period of relative calm and economic stability could dampen demand, potentially leading to price corrections. Investors must remain vigilant, closely monitoring global developments and their potential impact on the gold market. Section 8. Conclusion: Gold's enduring allure in a volatile world. The year 2025 has witnessed a remarkable resurgence in gold's appeal, driven by a confluence of geopolitical risks, economic uncertainties, and speculative fervor. From its role as a safe haven asset to its inflation hedging properties, gold continues to captivate investors seeking stability and growth. As we navigate the complexities of the global landscape, gold's enduring allure as a store of value and a hedge against risk remains as potent as ever. While its future trajectory remains uncertain, one thing is clear. Gold will continue to play a pivotal role in shaping investment strategies for years to come.